Hey, can you take the investment advisor quiz? Let's do it right now together. I'm Paul Mauro, Smart Financial. I'm going to give you a quiz. You can take it, and you can take it with your investment advisor and see what the answers are that you come up with. Let's take the investment advisor quiz. It's a checklist. It's pretty short. By the way, there's no right or wrong. It has a lot to do with the portfolio you're managing and how you're managing it. Number one, do you suck money out of my account every year for the next 20, 30 years of my retirement? People have a joke in the industry. They say investment advisors suck. Well, they do suck. That's how they make a living. If you have $1 million portfolio and it's 1% a year, they're going to take out 1%, $10,000 a year for the next 30 years. That's $300,000. Now, keep in mind, it comes right out of your money. And there is a big illusion. Here's the number one quiz question, which most people get wrong because of the fuzzy advertising in this area. And the question is, do you take out 1% whether you make money or not? I'll tell you my answer, which is yes, they take money out even if you lose. So if you go through 5 bad years, which by the way, the market isn't always up, it's up and down, yes. So let me just say, if you're down 20% in the market and the advisor takes his 1%, he accelerates your downstroke because he's still taking money out or she's still taking money out. It means that if they're taking 1%, it might be costing you 1.20 because the market's down 20%. So ask your investment advisor, do you take money out even if my portfolio goes down? Number two, if you're on income and your advisor says, hey, we're going to set up a 5% payout for you, what does that really mean? That means you're sort of in business with your advisor because they're getting 20% of that money. You get 5%, they take 1%, that's 20% of your income. That means without the advisor, you'd get 6%. So when you talk to your advisor and they say to you, oh, well, the 4% rule is now a 5% rule, that's great. Does that mean you are going to get 20% of my income every single year? And if you do the math, it looks to me like if your advisor's getting 1% and you're getting 5%, you're in partnership. They're getting 20% of your income. Third question, growth rate of returns. So let's say you're not on income yet. Maybe you're only 60 and you're going to grow this thing to 75 or something like that. And you do a nice balanced portfolio and your target's like 7 or 8%. If your growth in the portfolio is 8, you really net 7. So what's the net return after advisor fee? The higher your investment portfolio goes, the more money they make. Now, when some advisors online and on television say, well, we only make money when you make money, that's actually bunk. They make money whether your market goes up or down. They make more money if your portfolio goes from $1 million to $1.5 million. Their fee goes from $10,000 to $15,000. It's not bad or good. It's just the facts. Check with your advisor. Make sure you don't have any misunderstanding. Next, active equity investment is a daily market management job. Yes, I agree that's true. When I say the term equity management, that's stocks. Equity management is more or less something you have to pay attention to on a daily, weekly, monthly basis. And you have to gather research and you have to make strategic decisions. Yes, most people are smart enough to do the research, spend the time, and do it yourself. However, if you want to free up that block of time, you transfer that work to someone else and then they do it and charge you a fee. I am a big believer in hiring investment advisors to manage equity portfolios. I think 1% is a fair fee. Now that I've said that, when you ask your advisor, how much are they charging on equity management? And if they say 1% and your portfolio is $800,000, that's a fair number. Now you should say, the next question is, are you charging me 1% on my fixed income investments? Now let's talk about the fixed income. If you happen to have a balanced portfolio, and we'll use the example of $1 million Roth or IRA or something, 500,000 is in equities. It needs a lot of management, and 500,000 is fixed income. It's not a daily management job, folks. They are so simple. I do not see any reason why a person who has a balanced portfolio, I'm talking about more conservative investor, 50 and over, who've got an allocation of 25, 30, 40, 50% in fixed income. I don't see the point of paying 1% a year for fixed income management. It just doesn't make any sense. It's very simple to do yourself. There's a lot of fixed income products that you can get. You buy the product, you stick it in your portfolio. Let me just tell you the reason why I want you to ask these 5 questions. Because I want most people to know they can reduce the cost of their money management by 50%. You need to watch your fees because if you're lucky enough to retire at 70 and live to 100, that's a lot of fees on $1 million portfolio. If you can cut your fees in half by putting half in fixed income, there's $150,000 more to spend on you, your family, your grandkids. That's real money, even in New York, Massachusetts, Connecticut, or wherever you're listening to me. I think you should reallocate your portfolio in most cases to a no-fee, fixed income, longevity type product. That's ETFs, lifetime annuities, any product where you're not paying an annual fee. Even the set rate contracts where you can get like 5.9% for the next 5 years with no fees and no AUM charge. I mean, that's crazy good. Now, I also want to have you not be completely bamboozled by the term fiduciary. It's a very broad term. Pretty much everybody in certain states that touches your money is a fiduciary. And remember, just saying someone's a fiduciary doesn't make them faithful to you. It doesn't make them do a better job. It doesn't mean anything. Work with people you trust, work with people you get a referral from, work with folks that help you do research. I mean, we're big into the education before you do anything field. So reach out to us, subscribe to the channel, share this with your buddies that are 50 and over. This is for people who are hiring investment advisors. By the way, that's not the same as hiring a financial advisor team. This is just one piece of a person's financial advisor team. There's risk, investment, tax, cash flow, insurance, etc. This is just for the investment advisory portion. So click on that link below and I'll see you on the next video, staying on top of saving money. That's just part of the art of being smart.